Good morning. Today is November 13th, 2022, and we're going to talk about Bitcoin. I've been wanting to do this for a while because I'm interested in investing in Bitcoin. And last week there was a lot of volatility and a big drop in the price of Bitcoin, which led me to a change in opinion about investing in Bitcoin. And I thought, I don't think I want to do a video on why someone should invest in Bitcoin, but rather just some considerations. In the process of reading about Bitcoin and the crash the small crash they just underwent last week and everything else, I think I'm back on the train of pro-investing in Bitcoin.
So instead of talking about Bitcoin and cryptocurrencies during the height of the potential mania or craze, we wanted to talk about Bitcoin now that it's become shitcoin.
Shitcoin, I like that. Yes, I think the price today is about $16,000. It fell quite a bit over the last week because some liquidity issues were discovered from FTX, one of the big exchanges that trades Bitcoin.
Yeah, I heard all about that. What do you think? What do you think that was all about?
Well, the most interesting part of it, unrelated to the investing, I thought the way that the whole thing came out was interesting. Someone who I guess is a journalist just dug into the books about how FTX was conducting business and found that the CEO, I believe his last name is Bankman-Fried, also owned an a trading firm known as Alameda Capital.
Yep.
He was lending money to Alameda Capital from the exchange FTX, securitizing it with FTX's token FTT, and then collateralizing that for loans. So basically like using your own stock as collateral. And whenever someone dug into the books and found that all of these tokens, which had, kind of questionable underlying value, being used as collateral for his other trading firm, people got really concerned that everything was kind of structured on a house of sand. A lot of people pulled out of concerns that the investments were not secure. I thought it was interesting how it all came out, though, that someone just dug into things on public records that just hadn't really been looked at by anyone else. And that kind of led to a liquidity crisis.
Are you suggesting that there's a journalist in the 21st century who still does journalism? That's fascinating.
I guess that is what I'm...
that might be the most remarkable thing about this whole story.
Well, you just would think, since so many people, this is about the second largest cryptocurrency exchange. I guess I just assumed people would be looking at how they're structuring their business, and I don't know, it just surprised me that this had been going on for who knows how long, and had this journalist not published the article and then the article not gotten in the right hands and syndicated around, FTX would probably be totally fine right now for who knows how long.
Could be. It's interesting. I see where we have some prepared things to discuss, but there's three different things I'd like to really quickly take an aside to discuss, if that's okay. Three thoughts that I had, and then perhaps we can return. Elizabeth Holmes, Mt. Gox, and Devil Take the Hindmost. Mm-hmm. All right. The first, Elizabeth Holmes, and this is a similar sounding thing. We obviously don't know exactly what's happened with this whole FTX situation, but it has some features which to me are somewhat similar to Elizabeth Holmes. Are you familiar with her story? Right. I think a lot of people are. She ran this company, and I think in court it was determined that she conducted a significant amount of fraud. Mm-hmm. And the general claim she was making to investors was that she could take very diminutive amounts of blood, even nanoliters, and run it through and do a whole battery of tests, which my bailiwick is laboratory medicine and pathology, so that always struck me as a little bit incredible, and it turned out that it was, because it was all a fraud. But what's interesting about this CEO of FTX here and Elizabeth Holmes, who I believe is the CEO of Theranos Company, was that they both are extremely well connected. For example, Henry Kissinger was among her shareholders, right, or primary investors. FTX likewise has a lot of notable people, and you have pictures of that CEO sitting next to very well-known politicians, including former U.S. presidents. It's very odd to me. It's very odd to me. I mean, I get it that, you know, powerful, connected people, you know, power and money tend to run together, but it's just interesting to me. It's interesting to me. Maybe all we're seeing are people in those circles who are kind of blazing like a shooting star and kind of burning out. Or maybe there's something more to it. I really don't know.
I don't know. I know Elizabeth Holmes had like Henry Kissinger on her like board of directors, and I think everyone on her board of directors, like nobody was involved in laboratory medicine, so it was sort of confusing why. And she had no background in it either. She was like 18 and hadn't even finished college, or I think she was in her 20s, but she had dropped out of college. I don't even think her degree was in anything that had to do with biochemistry or medical science. I mean, I don't know for sure.
It's weird to me.
Yeah, I don't know.
It's weird to me that so many elites are currently having so much power very visibly.
Well, I don't know much about... So the CEO of FTX, his name was Bankman-Fried. I had to think about that.
Okay.
But I don't know that he was politically well-connected.
His hair was Bankman-Fried. I got electrocuted.
Well, I don't know. Maybe it was Bankman-Fried. I thought it was F-R-I-E-D, Fried, but who knows?
I think people are saying it Fried.
Yeah, sounds classier that way.
Sure.
Like, even if it was Fried, I feel like if I got a lot of money, I'd be like, no, it's Bankman-Fried. In fact, I'd be like, no, it's Bankman-Fried.
Or maybe we should call him Brinkman because he's on the brink of getting arrested.
Brinkman-Fried. But anyways, I don't know if he was well-connected prior to owning this exchange company, but I'm sure he was.
I almost certainly so. Although I'd have to look into it more. But not that I really care. Okay.
Are you claiming that he's a fraud?
I'm not claiming anything. I've known that other people have alleged that he's conducted fraud, and I don't want to put myself at risk of liability by claiming anything. Mm-hmm. And then I wanted to bring up Mt. Gox. Yeah, Mt. Gox happened back around 2013, plus or minus a year. And I remember being on the short side of that trade. And what a time to be alive.
How did you know that was going to pan out?
I didn't. I just happened to be on the short side because Bitcoin had reached parity with an ounce of gold, and I thought, this stuff is way overvalued.
Wow. And that puts it in perspective because in April of 2021, I think, when it hit its peak, gold was, maybe 2,200, 2,100, 2,000? Yeah. Bitcoin was like, I think almost 70,000 at its peak around the same time.
Well, yeah, it went up to a kilogram of gold or more. Yeah.
So, I mean, that's kind of interesting. You thought when it was on par with an ounce of gold, it was worth shorting. Well, I'm glad it worked out for you, although it sounds like that wasn't really the reason it worked out. It just happened that Mt. Gox also had some issues. Sure. Now, I don't know what you're referencing. I know that they had some issues with being suspected of market manipulation, but then after that they were hacked and lost 744,000 Bitcoin.
FTX has already claimed to be hacked. And Mt. Gox claimed to be hacked, and the Bitcoin went. Nobody knows where Bitcoin went.
Oh.
And I know people who lost in that endeavor because they never got refunded.
So
I got a friend down in Florida, very nice guy. He didn't have much, I don't think, but enough for it to be pretty irritating.
So did Mt. Gox claim it was hacked and then
they suspended redemptions? Whenever an institution suspends redemptions, that's it.
Do people suspect that FTX? I didn't know that FTX was claiming hacking.
They did. They have just, I think, in the last day or so. And then before that, they started the whole thing. Yeah, that journalist obviously making a story of it too. Probably people read that and they started withdrawing, and the withdrawal amounts became so high that they became basically a run in the bank.
Yeah. So, I think over 3 days they had something like $6 billion in transactions when typically they'd have withdrawals on any given day in the tens of millions.
Right.
And I think over the course of 3 days they had something like $6 billion in funds extracted from it.
Right. So just like this FTX situation, this has already happened with cryptocurrencies, specifically Bitcoin. I think this will be the first time since Mt. Gox there's been a major Bitcoin related. Well, actually, no, FTX didn't have Bitcoin, did they? They had their own token, or they had Bitcoin?
Well,
too?
FTX was a cryptocurrency exchange, so I think a lot of people who were holding Bitcoin may have held it with FTX.
Okay.
But they were using their native coin, their native token called FTT.
Mm-hmm.
They were loaning, I think, about $10 billion of the $16 billion in funds they loaned to Alameda Capital, who
As one does.
Bankman-Fried also owned as a trading firm.
Uh-huh.
And then they securitized it with the FTT token. And that was how they structured it. So the FTT token was just arbitrarily given a value of $22 per token because FTX claimed it would purchase at that price for all of the tokens in existence. But, that's just based off of the price they assigned it. And it's, it wasn't the most secure structure for collateral.
Can we put securitized in air quotes?
Right, yeah, exactly. Yeah. That's, if it was not securitized and actually securitized, they probably wouldn't have had a lot of issues with that they've experienced last week. So yeah.
The last derailment I wanted to take you on real quick was Devil Take the Hindmost, which is a very good book. I highly recommend it. We'll put it up. And it's about bubble formation, market bubble formation, going all the way back to the Tulip Mania, but it covers John Law's Mississippi schemes, it covers the South Sea bubble, it covers railroad frenzies, mostly in Britain and France, and in the United States too, a little bit in the Netherlands. It's a very good book, and you read that book, now it's probably a little easier to see, but at the height of cryptocurrency prices recently, maybe it was a little bit harder for some people to see. But whether ultimately there's a recovery in cryptocurrency prices or they eventually make a use case, what we can say now definitively is that was a bubble that burst. Is it an unsound investment? I guess we're going to be talking about that. But in terms of trading in markets, that was a bubble. We had lots of people, especially retail investors, get really excited about it. We had certain well-known figures recommending that people mortgage their house to go buy more Bitcoin. And they themselves, I believe, had their company borrow money to go borrow dollars to go buy Bitcoin. All these things to me have the markings of a bubble. Yep. And one of the few technical analysts that I think got it right, it was a guy named Gareth Soloway. I think I've showed you some of his work. And he was on Kitco News at the height of the Bitcoin bubble saying, I think this can go to 20, 30,000 before it goes anywhere else. And then it got down to 30, 40,000. And he said, I think this is going down to 10,000 before it goes anywhere else. I think he said 10 to 20,000. And now we're at 16-ish, 16, 17.
Yeah.
So he turned out to be right. And he had timelines that were about correct too. He nailed the price and the time pretty closely.
Yeah.
Based on his chart work. So hat tip to him. He did a good job there.
Well, I think that it is interesting. I don't think a lot of people probably foresaw the FTX issues that really caused the most recent severe drop. But at the end of the day, it is extremely volatile. And its underlying value, in theory at least, is zero. Because it doesn't have any cash flow, there's no real value to it insofar as an asset, unless you consider it a form of money. And then if you do consider it having the potential to become not just a currency but also money, I think that the long-term trajectory is far higher than anything we've seen yet. So I wouldn't actually totally disagree with all of those people. Now, I don't know that we'll see it even in our lifetime, so I wouldn't say mortgage your home and put all your money into it. But I kind of agree with a lot of those analysts that think it has potential to be valued at something like, millions per token eventually. The market capitalization for a lot of global currencies is in the trillions. And if Bitcoin can compete with that, then the total market cap for Bitcoin, which in some, once they're all mined, would be about 21 million coins, would have to put its market cap in the trillions for it to become stable, non-volatile, and truly able to compete with other forms of currency as a true money. Then that puts each token, over I guess in hundreds of millions of dollars each, right? If you do the math on that, $1 trillion divided by 21 million. But I really do see that. I believe in the underlying value and ideology of the cryptocurrency market, and I think Bitcoin is going to be the leader there.
That's interesting that you bring up market capitalization. I suppose I look at market capitalization in an old-fashioned way, that market capitalization or value of a total currency, of a fiat currency, such as the dollar or the pound, should correlate very strongly to the productive capacity of those individuals in that country. And the reason nations can get away with blowing up the value, or I should say undermining the value of fiat currency, but forcing them into common trade and common usage, is because they can require that taxes are paid in those fiat currencies. I have no choice but to use US dollars. I don't want to use US dollars. I'd much rather convert over to any other, not even any other currency, many other real monies that are not US dollars. I have no choice. I have to pay taxes in it. Even if I could find a utility provider, even if I could find a landlord, even if I could find a grocer who would accept money, I still have to transact in US dollars to pay taxes, which means I have to accept work, or I have to work for US dollars, or I have to accept investments in that are not US dollars, or either to pay US dollars or pay off something else or are something else, and then sell those, convert them to US dollars, and pay the taxes.
So is that an argument for the dollar?
That's what I think underpins fiat currencies altogether. I don't see as much or as clear of a use case for Bitcoin, at least in terms of forcing people to adopt it. I mean, we use the word fiat, and we're talking about imperial declaration, or an imperialistic or imperial-like declaration. Bitcoin doesn't have that. Now, if you take over the world as Emperor Alexis, and there actually was an Emperor Alexis in
Really?
the Byzantine Empire. Yeah, that's when your name is unisex. It used to be more for guys.
Especially Frenchmen, I think.
Well, and Greek.
Oh.
Yeah. But if you became Emperor Alexis, whatever the number would be, and you did require that everyone pays you taxes or pays their taxes to your empire in Bitcoin, you will see a massive use case for Bitcoin, and the price of it and everything else, from dollars to oil to water to yuan to the pound, will go up substantially.
But that's the beauty of Bitcoin, is it would never be fiat currency. It would never be forced upon people. It would be a natural migration by people to choose to transact in that currency. And that's the whole beauty of it. If enough people decide that they don't want to hold fiat currency, that they feel that the value is being taken away from them over time, or that they don't want monetary policy and a Federal Reserve or a central bank influencing the quantity and the circulation of it. It's external from all of that. There's no third party that controls it. It's decentralized. It would not be fiat currency. It would in fact be money. And so I don't think it would work. Like, I think, wasn't it El Salvador? They implemented Bitcoin as their national currency. They have the US dollar, and now Bitcoin is another national currency that they're holding
good.
for.
We have the economic might of El Salvador.
No, what I'm saying is that because it's now considered like their fiat currency, I think only like 20% or less of their constituents or their citizens are transacting with it, because it's not being adopted. You can't force people to pick it up. However, in Venezuela and I think in Zimbabwe, they're having currency crises, and people are transacting in it because of the currency crises, and it's being picked up there hugely and being transacted by business and everywhere else. It's actually one of the really positive signs, I think, for Bitcoin, is that you see in times of fiat currency crisis, that's when constituents are tending to turn to Bitcoin, and it's starting to really find a big opportunity there.
To be fair, when we've had hyperinflationary currency crises that have been better documented, we've had pieces of tree bark used as currency, and many other things like that, because people are desperate to try to use something or anything to determine or to delineate relative value of work. I mean, they need things to trade, and of course they always resort to barter too. I'm not sure that the strongest argument you have is that there are some countries where citizens are desperate to have anything for currency, are turning to anything but what their nation states are issuing, because their nation states are issuing something that's such collective garbage that they have to go elsewhere.
I mean, I guess that's true. That's not my number one argument for it, but it was just because of what you said, I wanted to bring that up. I don't think it would be, I don't think the way that I see Bitcoin becoming mainstream transactions, I don't think let me rephrase that. I don't see Bitcoin being adopted globally due to government imposing Bitcoin on its citizens.
Okay. Let me point out two arguments, or one argument, I guess, that sort of supports your position, even though I think I disagree with your conclusion. There's an interesting spike, or I shouldn't say spike, but an increase in Bitcoin price that wasn't clearly in a technical pattern. Maybe about 2 or 3 months ago, there was a rise, I want to say from about 18,000 to 23,000 or so in price. And it coincided with capital controls being imposed on a lot of Russians. And so the idea was, I'm not sure how much of this is narrative, and I think it's very hard to really investigate it. Certainly now, maybe years down the line, historians can take a look at it once a lot of documents and records have been opened up for analysis. But there's a coincidence of elevation of Bitcoin price with these capital controls, suggesting that possibly people were obtaining Bitcoin and sending it digitally out of the country as a way of bypassing capital controls. Now, similarly, it's thought that many of the original bids of Bitcoin back in 2017, 2018, 2019, that time period was largely due to the Chinese imposing capital controls on its citizens. And so Bitcoin's biggest use case in my mind is probably in sending of remittances / bypassing capital controls that nation states have imposed on assets. It's much easier, truly, to take a USB drive with a cold storage wallet, or to simply remember the wallet yourself and access your Bitcoin at a future date from location B, having moved from location A. It's much harder to take a briefcase full of fiat bills or a couple acres of land or a couple kilograms of gold or silver or whatever, a fine art collection or whatever, something else.
Something
that's worth,
tangible, physical,
right,
you have to...
$1 million,
right.
$2 million or whatever worth of assets. So that's probably one of the strongest use cases.
Yes, and that's something that I wanted to touch on as well, because right now the SWIFT system is how a lot of countries internationally will transact, and that requires the US dollar, which of course is not in, I think, the best interest of the American economy, but I do believe that it would probably be advantageous for most countries to transact without the SWIFT system, and that would be Bitcoin, that offers a very easy digital form of international transactions without a third party involved. So, if this became a global currency, I know there's a lot of concerns about criminal activity being, it's not able to be tracked and all of these things. But I mean, aside from that, just two countries that want to transact, or two individuals in different countries that want to transact, they don't need any supervision from a third party. And I think that actually gives it another advantage.
Can I parse out two things from all the things you said? First, I'd like to touch really briefly on the idea that it can't be tracked. I understand that during its earlier fascistic days in this year, in the year 2022, the Canadian government did in fact track certain donations to certain undesirable free speech political groups. And in so doing, they were able to freeze the Bitcoin donations and prevent them from being donated. Maybe in a pure technical sense, there may be ways to ensure that Bitcoin cannot be tracked. But for people who are using it commonly in probably a lot of exchanges and payment methods, I don't know that all of those are invulnerable from being tracked.
Well, yeah, that is true. There are different types of exchanges. Some are decentralized and others are centralized. So if you're using the easier to use, more user-friendly exchanges, and certainly the more popular ones like Binance and even FTX, those are centralized forms of exchanges. So they do follow certain rules and they do report things. And in March, there was some executive orders that were signed by President Biden to continue to sanction exchanges that have any criminal activity being done, because if you're doing anything on a centralized exchange or whatever they want to, maybe they just don't like it. I don't know. But the point is yes, there are now ways to transact that can be monitored and followed, but there are still also ways to transact that are decentralized, not monitored, and totally, I think, untouchable by government.
Interesting.
I don't know how, they're not as user-friendly. They don't have any insurance risk, so there's some downside to using them. But they're out there, and I don't think if individuals are using that type of exchange, I don't think it can be sanctioned or anything like that.
Maybe that's true. And I take it by President Biden, you're referring to former Vice President Biden. Okay.
I stopped myself wondering if you'd correct me.
Well, I just know what I can validate for myself. But moving on to the second point that I wanted to parse out is transaction cost. I'm not a huge fan of Swift, but every time that I use Swift, it usually costs me to transfer cash from one country to another, or domestically, it costs me a flat wiring fee, usually somewhere in the neighborhood of $15, $25, sometimes $50. But however, the stability of the dollar from the time before the wire to the time after the wire, or from the time where I'm sending it from one country to the time that I can use it or spend it in the second country, is a de minimis period of time, usually measured in minutes or hours or days, and the value of the dollar doesn't, its change is de minimis as well. I wouldn't expect any significant fluctuation. This is a sincere question that I have for you, maybe also an argument, which is, isn't the big problem with trying to use Bitcoin, which has a volatile price, which has known to change 1, 5, sometimes even 10% within a matter of hours, isn't that a significant barrier to using it in international commerce?
It has to be able to maintain its value. It has to be a store of value, and
right. It's
currently not. So I don't think that it would be a great. I don't think it would be a great way to transact today. It is really volatile. I think a part of the reason we see so much volatility is because the currency exchanges, the cryptocurrency exchanges, still have a lot of problems. And it's also, as I said, not, it's still, the sum of funds is still too small that it's not liquid enough to be non-volatile. So it's still too illiquid. There's not enough money or enough. Its market value, its market cap is not large enough to be non-volatile. Does that make sense?
Yeah, it does.
I'm not sure if I'm explaining
If I understand,
well.
You're saying that if the market capitalization of Bitcoin, rather than the approximately 0.8 trillion that it is currently, if it was 800 trillion, then if somebody decided to add in or take out a trillion, a billion or a couple $1 million, it wouldn't significantly impact the price.
Exactly.
Okay.
It's still, I think, very much vulnerable to market manipulation, especially these like altcoins, but even Bitcoin, because it's just not large enough yet.
Yeah. There's one comment I want to make, which is that in the long span of human history, I've never known an effective money to require any other technical know-how or ability than simple arithmetic. And my concern for any cryptocurrency as a use case is ease of use. I'm not so sure about that.
Yeah, it's not. I mean, that definitely is a barrier. Is that in order for it to remain decentralized, that means there's no customer service. That means there's no insurance. That means it's not all that user friendly to transact in. But it is digital. All you need is a device with access to the internet. Anyone can do it, but it's not the easiest means of transaction. I do acknowledge that. I'm not sure that there's a way for it to be completely decentralized and also very user friendly, but it is digital. It's not physical. I think there are advantages to it, and I think especially if there is a currency crisis, it could be somewhere that people go en masse to transact. That being said, I did want to say it's not currently, I don't even think it's currently 0.8 trillion.
Is it not?
It's, I think, about 320 billion right now because of the price drop.
My confusion.
That's the market cap.
Confusion, I think, was 0.8 trillion being the aggregate cryptocurrency market.
Oh, that's Bitcoin.
So I
itself.
misstated it. I apologize.
No, that's okay. But I was going to say that I also think one of the reasons why it's still very volatile, aside from the total sum of funds being too low, is that it still is vulnerable to market manipulation. And I don't know if regulation is the answer, but there's still a lot of these kind of, for lack of a better word, sort of derivative markets that are popping up in these exchanges that put a lot of people's funds at risk. And especially with trading on margin and more speculative movement within Bitcoin, it can cause the price to very drastically be affected. So I don't know if it will be, I don't think it should be regulation. I think it's going to be the private market that's going to solve this. FTX crashing, for example. Now you have Binance, you have crypto.com, you have, I forget the other ones.
The longer lasting, more reputable exchanges who have not yet failed to meet redemption rights.
They're all coming out and they're saying, look, we're going to do audits. We're going to expose our books and our wallets. We're going to show you that we are in fact holding, for every one Bitcoin that you are supposed to hold, we are holding one Bitcoin. And so, there are also third-party companies now that are out there that can do analyses of these exchanges and investigating them. I think that we will see a lot of the kind of more risky derivative markets and I don't know if it's technically fraudulent, but it does feel like fraudulent or some kind of like inappropriate scheme to, use that collateral, like, FTX is collateralizing their own tokens. I think we'll see that because that becomes such an issue over time, there's going to be ways that the market will address that and be able to self-monitor so that it is more stable, it is more reliable. People can trust that their funds aren't being gambled away or put at huge risk. If that is able to be stabilized, and in addition to that, we have issues with our dollars, especially like a major currency crisis here or anywhere else, especially if there's some sort of global issue. I mean, we talked about BRICS. We talked about how there could be, some alternate form of currency that's backed by gold. Well, what if they choose to back it by Bitcoin? What if they use Bitcoin as their choice of transactant? I mean, I don't think they will. I don't think it's able to be backed by that because it's too, it's just too volatile. But it's just a potential that some group of countries could say, we are now going to transact in this, and we're going to. I don't know if there's a way they could stabilize it by saying, like, our dollars are now backed by this many Bitcoin, domestically at least, or something like that. I think there's a lot of potential. That's all.
Yeah, there's potential. Sure. And then, your notion about market capitalization really sounds like a different way of describing a common use case for any kind of currency or money, which is widespread adoption. And the implication might be that if not an insufficient number of people have dumped fiat currencies into the price of Bitcoin to bid it up, then there's not a sufficient number of people who have adopted it and therefore who are willing to transact in it.
Not yet.
Not yet, at least.
But I see everything going on in the economy as pointing towards issues with the U.S. dollar. There's a lot of risk right now, I think, to be transacting in dollars. If any of those things happen, like, if we see severe inflation, or if there's an alternate global currency that's competing with the U.S. dollar as the reserve currency, I mean, there's a lot of things could happen. And I think that's a big opportunity for people to collectively transactions in Bitcoin.
Gareth Soloway is one person I know who said this, but there have been others as well. To reference Gareth Soloway again, I like him very much. He said that he thinks that if or when there's a cryptocurrency crash, now there clearly has been, that it might be analogous to the end of the 2001 tech bubble, that a lot of poor quality companies, notably things like pets.com, went to nothing or near nothing very quickly and stayed there, or eventually went bankrupt, or were bought out at very low prices relative to their highs after the fact. And he suggests that there might be a period after the cryptocurrency crash where a lot of the lower quality so-called big cryptocurrencies could go by the wayside, basically go to zero or near to zero, and then whatever remains holding value, things such as Bitcoin, Ethereum, Hedera Hashgraph, especially things that aren't linked to Tether, which I think Grant Williams had some concerns about, maybe was doing some fractional reserve banking, but I'm not sure if that's true. Some indications maybe they were. But the general idea being that Bitcoin could be the next Google or Amazon, or Ethereum could be the next Microsoft to rise from the ashes of the crash. I don't know how true any of that is. I don't know. I recognize that it's a possibility.
Well, I think that that's another point I wanted to make.
Yeah.
A lot of the people who had margin, or who were trading on margin with Bitcoin, I mean, a lot of them have been margin called. A lot of that has been wiped away. So if you're going to invest, this would be a good time. I think it's close to a bottom.
Are you basing that on fundamental analysis of some kind, or technical, or kind of a gut feeling?
Well, I believe that a lot of people have been margin called. And so therefore the price has dropped. And I think there's some concern that that's going to continue. I think analysts are projecting that it could go all the way down to $10,000. But, I mean, once you have a lot of those margin calls that have been called and people have to sell, you get to a place where it's a little bit safer to invest because there's not so much underlying volatility.
I agree with your principle there, but what I don't agree with you is the concept that it happens very quickly. When you talk about margin calls, or you talk about devaluation of asset bubbles, for example, the 2001 crash, the tech bubble crash, that went from I believe 2000 to 2003. The Great Financial Crisis, so-called Great Financial Crisis crash, that went from 2007 to 2009. The Great Depression crash went from 1929 to 1932. This current crash I believe we're in, or market top, or excessive valuation in stocks, has begun in January of 2021. I don't know how long that'll take. But if you look at September of 2021 as the peak in Bitcoin price, which I believe it was around 68,000.
It was around 68,
okay.
69,000.
Then that bubble might similarly take an equally long time. So instead of correcting from 68,000 to currently around 16,000, and that being the end of it because a couple of institutions, including Celsius, the Luna currency, now FTX, have failed, I think there could be more bad news in the cards that we haven't heard about yet. And I think there could be more selling pressure, especially as a lot of the Bitcoin holders who are probably also investing in other risky assets, such as high beta tech companies or other things like that. Maybe as one market liquidates, it's going to force liquidation in the cryptocurrency market. I don't get the impression that many cryptocurrency holders of today are the most responsible investors. I think they've taken a lot of risk, and all risk assets across the spectrum, including Bitcoin, which has been trading for the better part of the last 2 years, exactly like a high beta tech stock, with rare deviations such as that one that coincided with the Russian capital controls being imposed, that Bitcoin and other cryptocurrencies will likewise continue going down if there's continued sell-off in tech.
And I think that's a good point, but let's not think about it in terms of time. Let's think about it in terms of value. It's already gone down, 85% from its all-time highs.
And it can do so over again.
And that's fine, but if you're talking about, in dollar terms, $16,000 per Bitcoin, and it drops another 80%. Okay, so now in some it went from 85% down to, let's even say it goes on to 95%. Are you really going to be that upset if it stays down for another 10 years and then in 50 years from now these tokens are valued at something like $1 million? I mean, I'm just saying, if you don't worry about the timeline, it may be depressed for the next 5 years, but what if it's not? You're getting an 85% discount from all-time highs. And truly, if you think about the idea of Bitcoin, of its potential, I do believe, I mean, I know you don't like these analysts who say, oh, it's going to be millions per Bitcoin, but at least the idea of it, if you believe in decentralized money, it's got such potential. I mean, I see it as, I'll take the 85% off of all-time highs when I believe that the potential is, I don't know, hundreds of times over what the all-time highs even were. And I don't mind that extra, even if it dropped 50% from today's value, 90% from today's value. The overall trajectory, it's like pennies to the, I don't even know, it's like pennies right now to what could be just a huge amount of wealth.
Well, I don't know. You raised some interesting points there, but I just like to consider the math here. See, it's down 85%, and then you're saying you don't really care if you buy it when it's down 85% versus where it's down 99%.
Mm-hmm.
Well, let's say it goes back up just to, let's say it goes up to $500,000, $1 million, whatever it ends up settling at in terms of fiat. If you buy it today at negative 85%, that's fine. And then if you wait, let's say, a year or two and it's down to negative 99%, you'll be able to accumulate 15 times as much.
But what if it doesn't? What if it goes back up before then? I mean, then of course that's FOMO. I mean,
right.
That's part of
FOMO
investing.
what started all this?
But if we believe that, which I do, I think gold is a great opportunity. I think gold and silver are good investments right now because they are outside of the Federal Reserve's control. They are outside of the monetary system. They are somewhat deregulated or decentralized, I guess is a better word. And in a similar way, Bitcoin has a lot of those same characteristics. I don't know that it's really proven to be a good inflation hedge, but so far gold, at least for this cycle of inflation, gold hasn't shown itself to be that way either. I think it could be an alternative means of investing in a period of time where people don't want to keep their money in traditional bonds, stocks, equities, commodities.
Well, you've got some pretty big thinkers who I respect a lot in your corner. You got people like Robert Kiyosaki, who calls Bitcoin the people's money. You've got people like Michael Maloney, who like hetero hash graph and Bitcoin and Ethereum. But then you got people like Jim Rickards, who describes not wanting to get involved in Bitcoin because it doesn't see it as a real asset. And he points to the tragic human costs that a lot of the people who lost their shirts and speculating on Bitcoin. He brings up the example of a South Korean garage mechanic who goes off and shoots himself because his Bitcoin holdings went down from whatever by 75%. So speculative bubbles of any kind have a human cost, and probably the implementation of a new currency or a new money, it can be difficult and disruptive for a lot of people's lives.
Well, sure, but I mean it is speculative at this point, so I would not take all of my life savings and put it into Bitcoin. I think that would be unwise.
How much would you take? On a percentage basis.
I mean, right now, I would want to put 10 to 20% in if I had it in liquid cash right now.
Wow.
If I wasn't already invested, am I going to pull funds out of investments I'm already holding? I don't think so. Definitely not, in fact. But am I interested in putting 10 to 20% of my portfolio that I can get in cash the next an opportunity that I have? Yes.
Wow.
I am.
That's
think this is
strong.
a really good opportunity. And it's also because I believe in the ideology behind it. I really do. And I think it is it's the people's way of basically giving the finger to the central bank, to monetary policy that's controlled by any government, including our own.
I think that's a mistake.
Well, I guess time will tell, but I have one other thing I want to say that's a little
Sure.
bit off topic, but
Sorry.
I do want to touch upon that has to do with Bitcoin. And it's that it's deflationary. I think that is the way to put it. But what I was saying when we were talking about the dollar is that I think a better system would be a finite number of whatever the currency's units will be. And that is set. And over time, as your economy grows, prices of any given good or service go down, which is counterintuitive to economic growth. But I think a better system would be a global currency that has a finite number of units, and then as the health of the economy is improving, we see lower costs for everything. Because I believe, correct me if I'm wrong, it's because the currency is deflationary. By not expanding the currency, the economy grows and it actually causes what would appear to be deflation.
No,
Is that correct?
It would be deflation by definition because you have an increase of productivity in a stability or potentially decrease because Bitcoin is always lost over time as people forget their wallet keys. You have a deflationary pressure there, sure.
Okay, let's say they don't forget their wallet keys and the
Still
total
deflationary,
number
because
remains stable.
the productivity remains.
Yes, high,
doesn't fall away.
and the coin, the total amount of money stays
Right.
here. I just think, I mean, and maybe this is just a donation to the cause that it ultimately is because Bitcoin crashes to zero. But I think I'm okay with that because I really stand behind the ideology of it. At the very least,
I think that's a huge mistake. I think confounding, not confounding. Conflating, commingling, putting ideology and investing together are a big mistake. I think there's always situations where you have to say something is so repugnant, you'll never invest in it. For example, if somebody wanted to do a Holocaust 2.0, regardless of how profitably it could possibly be, I think nobody should ever invest in that.
Okay, because I was going to argue with you about this.
Pretty obvious. But unfortunately, there are a lot of things where you can't foresee what future governments and politicians will do. And their ability to impose dramatic capital controls, especially as they at least are talking about and potentially may soon try in aggregate to implement central bank digital currencies, I think that's a huge. If they have Bitcoin which can compete with that, and that becomes illegal to use in all throughout the United States and the Western world, what is the value for Bitcoin?
Yes, I okay, all right, fair enough. I will point out that there are some concerns. One of them being regulation or complete outright, criminalization of it.
Well, if they could do it to gold, which is right there in the U.S. Constitution as the only type of money that the U.S. Mint or the U.S. Congress is allowed to print or create, and they've substituted these garbage pieces of paper since the beginning of our country's founding, well, why can't they do that with Bitcoin as well?
They could
very easily.
And I do acknowledge that is one of the risks that I was going to talk about is that it could be completely banned theoretically. But again, I think there'd still be a black market for it because they can ban it. But especially in a period of time, if we had like hyperinflation or the dollar was just totally devalued, I guess. Hyperinflation. I mean, there would be a market for it still. Would it be as easy to use? Would it be as valuable? I'm sure it wouldn't be. But I think that's also really hard for them to really... I don't know that they could actually successfully track it to ban it in the decentralized dark net, I mean, even if they wanted to, I'm just not sure that it would be possible to completely eradicate its use.
if they're I don't pretend to be a technical expert on internet or information technology systems, and I'm sure you're not either.
No.
But I'm sure if they can figure out ways to track, I'm sure if they can identify and track internet usage generally, and they're willing to, as the U.S. federal government has already done time and time again, completely violate Fourth Amendment rights for individual citizens and do things like illegally tap phones without a warrant or due process, illegally tap internet connections without warrants or due process, potentially install incriminating materials or download incriminating materials onto hard drives of U.S. citizens without due process, release certain politically connected citizens without duly processing them, et cetera, et cetera.
You don't trust them.
Generally speaking, if we have a massively corrupt United States federal government and many companies that are strongly associated with them who aid and abet much of their progress or regress, depending on how you view it, then I think all of these same tactics could be applied to Bitcoin users, making it very difficult for most people in actuality to utilize it, unfortunately.
All right. I will agree with that.
Yeah.
I can't deny that there is a risk there.
All right. Sorry, I'll stop harping on it.
No, I have one other risk to investing in
Okay.
Bitcoin that I think is definitely worth talking about, which is soured investor sentiment.
Yep.
Because this is not the first exchange that has failed. Like you mentioned, Mt. Gox.
Mm-hmm.
Is also not the only one. A lot of these altcoins, I think, scare people about cryptocurrency because they fail a lot. Mm-hmm. If the I don't want to say it needs to be regulated. I don't think regulation from the government is the answer. But if it cannot find a way to self-regulate, meaning other private entities that can come in and help keep these exchanges honest, for lack of a better word, about how they're...
Well, like, how about, I'll give you an example. Like the American Medical Association used to be a legitimate organization of free doctors freely practicing in a republic and coming up with rules and bylaws
to self-govern.
To self-govern. It
Yes.
used to be a self-governing organization.
And
it no longer is.
And that's what I'm trying to say.
Right.
I think if these exchanges can find a way to either self-govern or there can be some third party there, which there are now. There are these like third party companies that will analyze various exchanges and like rate them, do audits of them. I think that will be an answer. But if that does not work out, if there's a lot of manipulation of the market, if there's a lot of volatility that's introduced because of failures of exchanges that can't figure out a way to make it a safe place to invest, then over time I think that could kill the entire movement.
Yeah.
So I do see that as a concern. I believe that there will be a way to resolve that and make it a safer place and a more secure place. In fact, every time that you see a failure, I think only introduces more self-government or transparency of these exchanges to their customers, but only time will tell.
Yeah.
So those are kind of my main points, and I'm sure you're not going to disagree with that one. You're not, but is there anything else you want to?
No, I agree, and I'll add a nuance to it, which is that back during some of the railroad busts, railroads are starved for capital. Legitimate projects for railroads are starved for capital for many years or decades after. And then similarly after the dot-com bust, I think before the institution of quantitative easing, a lot of the tech companies that we know today probably languished for many, many years before being fully appreciated. And perhaps during that period of languishing, they were underinvested in capital. Now I think they're all well overinvested in capital with cheap liquidity. But maybe back in the day there for a while. The classical example might be Amazon, which rose, I think, from $6 to, what did it run up to? Like $3,000 a share, split adjusted. So that kind of thing could happen. But again, I lean hard on the argument that it takes time to correct these things. All the people who are really sore about their capital losses of Bitcoin, and I hope, I feel bad for a lot of these people. I'm sure they're not having a good time right now. Unfortunately, I think that they're probably going to have even worse times ahead if they don't liquidate, because I see continued price declines on a fundamental and technical basis. You look at the chart of Bitcoin, I mean, it's just like this, and we're back to the toward the bottom of where it started, but we're not quite there. 10,000 is where it take to get to where it started before the whole bubble formed. And usually bubbles close out at that price and even sink below it, and they stick around there for years and years and years, even a decade or two, while waiting for factors to change. Now Bitcoin, I've seen the price charts. It repeats the cycle every 4 or 5 years, but I think trying to jump in at year plus one of the bubble. Yeah, if the height of the bubble was September 2021 and we're here at November 2022, we're only 18 months after the crash. I think patience is strongly recommended. I'm certainly intending to act on it, and if I put any kind of allocation in cryptocurrencies, it'll be a very small position, and it'll be at least a year or two from now.
Would it be at a certain price or a certain time?
I'd honestly, this is an area where we time discipline. At least a year, maybe 2 years. If the price dropped down to maybe something ridiculously low by Bitcoin standards, maybe $550 a coin.
What?
I'd say, okay, well, price has gone down quite a lot.
I don't think it'll ever go that low. But I will tell you this, I did read a lot of these like projections and analysts, and I will agree. I think the consensus is that it'll go lower before it goes back up.
Right.
I don't think it'll go that low. I think 10,000 is probably like what most people expect, but I don't know if I want to wait. So we'll see.
Yeah, I guess we'll see.
But yeah, I mean, I don't know if I would say sleep on it, but don't sleep on it, because I think with Bitcoin, maybe sleeping on it and sleeping on it is a good idea. So on this one, we'll just say, why don't you just sleep on it?
Well, at least if you don't have any, but perhaps if you do have some, especially a large position, now's the time to start thinking about alternative uses of capital, and how to deal with loss.
So you would say sleep on it, but don't sleep on it, and I would say sleep on it.
I would say there are plenty of people right now who aren't sleeping on it because they can't get to sleep.
Well, I guess that's that'll have to be how we end this, because it is a debate after all today.
That's right.
And so I say sleep on it.
Get a good night's sleep.